Okay, 3, 2, 1.
Can you just deliver your line and then we'll get into it?
All right, welcome back to Distilled Insights. This is our third episode. I'm Frank, your host. We've got some really interesting stuff to discuss today. We've got Chris Leal here again. We keep telling him not to come back, but he keeps showing up and oversharing and telling us things that probably we don't need to share with everybody, but that's okay. Right, we love him anyway. And we got Manny, the Bhudia of Alderton Bhudia, and the one who keeps me and probably Chris in check a little bit. Don't like that.
No, it's all right. I'm just going to ignore those comments.
Yeah.
I have been tasked on this auspicious occasion to introduce the whiskey from now on, because I do such a phenomenal job, a very humble job, I believe.
I mean, some of us have got limited skills. This is one of yours.
Apparently delivering lines is just what I do best, unlike your intro. So today we have, and I'm going to completely and wildly mispronounce this, no doubt, Bladnoch. You got to really get it in the back of your throat, apparently, according to all the Scottish mates that I have. Either that or they're just taking the mickey out of me. This is a beautiful ember cask from the lowland area, 53.5%. Definitely the colour of dirty dishwater, but I'm sure it tastes way better than that.
Lovely.
Pour.
And so today we're going to chat a little bit about, it's going to be a little bit, I suppose, of a, exposing some truths, having some open and honest discussions about probably our firm, right? Because obviously the three of us are here trying to steer this thing in the right direction. We've had a very wild year, I think, to say the least, and it's come with a whole lot of lessons, a whole lot of positives, and a whole lot of negatives. So
self-reflection.
Yeah, cool. I think it's an important thing to to do regularly and assess what's gone right, what's gone wrong, and how do we make sure that the stuff that's gone wrong doesn't repeat. And how do we double down on the stuff that's working well, and what's the thought process behind that? Not just for an accounting firm, but for any business, I suppose. So using us as a test case, I think that's a nice conversation to have to, despite the fun and jokes and laughter, right, still business, still serious, we're still here for a reason, right, we're still trying to make something work and be successful. So let's talk about everything that makes that happen, or everything we're doing to try and ensure that happens as best we can, right, and maybe some people will take some lessons from it. I think between the three of us here, there's enough years of experience, despite our youth, to be able to share a bit of wisdom on how to push a business in the right direction.
I believe collectively our ages might tie into a baby boomer.
You're nearly there because 21, 18, 62. Well, cheers, big ears.
I consider myself the elder statesman.
Yeah.
Thank you.
Cheers. So we talk about regularly that we should be sharing with people that they can also talk about and think about and spend a lot of time on to push them in the right direction.
Well, once again, I think you need to talk about where a company is in its life cycle and the goals of what you're trying to achieve before you start then narrowing down onto what are your crucial targets, what are the numbers that you should be focusing your attention on. There's no point trying to sit there and go, well, you need to look at all the numbers, because trying to massage all of them to try and achieve a phenomenal outcome, some things will never work that way. It's going to be all about the perspective of what you're trying to do. I mean, if you're looking at a company, we'll use something wildly different to where we are in the cycle of things, is something like your Commonwealth banks or anything like that are your absolute behemoths of the Australian industry and banking industry, and even one of the best banks in the world. You cannot sit there and go, we need to look at revenue for argument's sake. I mean, sure, you can always look at it, but to sit there and expect it to grow 30% in a year is silly. You cannot wildly or possibly imagine a company like that to achieve those sort of numbers. So their metrics are always going to be vastly different. They're far more mature business. It's not really about growing into new markets. It's about how do we make profitability. We've got shareholders, we've got investors that want dividends. There's all those sorts of things. They have a look at a completely different set of metrics to something like ourselves, which are, we're on a growth journey. We're young, we're vibrant, we want to expand what we have, and so we're going to have very different metrics.
So let's talk about a bit the similarities of that then, because what you seem to be mentioning a little bit, which we talk about regularly, and you and I do too, Chris, and the three of us do in most cases, talking about alignment of objective, alignment of values, and alignment of where we are and where we want to go, right? And so then with that in mind, if you were to compare the CBA or NAB or ANZ or any of the big companies like that, the blue chip stocks, right? How do you think their board discussions differ or are similar to our board discussions, right? Because I think that's a thing where people don't compare themselves to bigger businesses because I think they're not there. But I actually think that the conversations are largely the same when you're trying to, if you're an ambitious business, right? If you are just in business to sort of get by and you're sort of start a business to give yourself a job, that's a different thing, right?
Yeah.
We're in a realm of business where we're trying to make big moves, we're trying to be innovative, we're trying to grow and expand and do a lot of wild things. So that comes with a different set of conversations to, how do we just make sure we just stay alive, right, for as long as possible and, and whatever. And so what do you think the differences are? What does a CBA board meeting look like to you, or a BHP or a big business board meeting look like to you? And even if you think about some of our clients, what do you think our clients, the larger clients, the listed clients, what do you think they're talking about at a board level?
People would be one.
Yeah.
They'd still be looking at who's in the right spots, who's fitting with, I guess, the progression plan, where they want to be in a year's time. Do they fit with that? Do they not? Do they need someone? Do they need more in the team? I guess would be something else they're looking at.
The executive team. We
Yeah,
talk about the
exactly.
strategic direction,
yeah.
and who's the ones that are going to be hands-on in making that happen. Right? What do you think?
Look, I think like any business and how you structure it, you can always model the incumbent, the big player. The difference, I think, is what you're really asking is, one's going to be the scale of what you can achieve versus what they can achieve. You're still going to be having very similar conversations, but it's going to be the risk profile of where those conversations lie are going to be wildly different.
Yeah.
That's how I see the differences, really. I mean, these big players, they are so much more risk averse because they are in the big fish position. The young player coming in has to take on wildly more risk in order to achieve a modicum of outcome, because they've got to take it away from the incumbent.
Yeah.
They've got to be innovative. They've got to think outside the box, and yes, that comes with some big plays, which is going to require a different risk metric.
But so why wouldn't the big, do you think that then the shareholder value or the commitment to shareholders of companies that are large scale like that, right? Because of that commitment and that objective, I suppose, to increase the value and make sure they're all taken care of, right? It limits, their strategic innovation and things in a big way, because even if you're that big, you've got cash flow, you've got everything, why not still do bold moves and do things like that? Like, I get that if they go bad, that it can have fairly negative repercussions, but the upside still must be just as good for them if they get it right, same as us at a small level.
If they get it wrong, would the consequence not be higher to some degree?
But they've got such a strong foundation that they can rebuild probably easier than we can, right? So if a small business like us, it goes on a wildly big innovation play that's outside and requires a lot of funding, and we're losing a big chunk of cash flow and things to something that if it doesn't work, it's going to take us a long time to recover, right?
I posit that it then comes down to industries.
Yeah.
So once again, we're using CBA in this analogy. To grow in Australia, there's no... You're robbing from one of the other majors. Really.
Yeah, the big four is
it's
just
it's this in this area this month. Data, we'll take it. You take it. For the Australian banks in that fraternity to take on more innovation and more risk, and I don't mean improving on their tech stack or something like that, which they're all doing in order to stay relevant, and there's always an element of spend, but I mean to really take a big bold play, there's nowhere to grow into other than to go international, and then you're talking about a completely different set of policies and rules and regulations which then don't benefit their style of business. So they're not going to jeopardize that, knowing full well they're making a lot of money. Now, get out of that really tightly regulated industry, and we can start talking about the tech space. The big tech companies, the ones that we all know and somewhat love in America, do take on wild plays, do big expenditures. So Google just announced their quarterly results for the June quarter. It was expected there's going to be a $75 billion capital spend on AI. They upped it to 85. These guys are spending wild amount of money, because if they don't, the consequences are dire for their business. And the money that they can grow into for the future, they still haven't exhausted that. There's still a huge market to grow into. So yes, in that regard, it makes sense for them to do that.
Yeah. But exactly right. So for us, right, it's like making a big play on, some kind of innovation, right, is for the purpose of gaining as much market share as we can and being in front of everyone as far as we possibly can, right, because that's the only way we're going to be seen as a fast mover. They're doing it for safety, as you're saying, right? They're doing it because they know everyone else at their level is doing the same thing.
Yeah.
So they must do it, otherwise they lose market share. So it's no longer about grabbing, it's about securing and holding, right?
I still think it's about grabbing to a certain degree.
And so,
I think you are right. There's a more nuanced and more balanced approach because they are the bigger player. They want to. I mean, nobody wants to see the value of their wealth erode over time, irrespective whether they're a massive corporation or a family group. You don't want to see your home go backwards in value.
Also on the spend, we don't know what they've put in terms of innovation of that spend. Half of it could have gone towards innovation. We wouldn't know until 3, 4, 5 years down the line.
Yeah, I mean, obviously they do report quite heavily, and you can get more and more details as things go on. But yes, we're never going to know the true inside workings unless you're in it. And I take your point, but I look at our little burgeoning business here, and I sit there and think of what you say. We're doing it to be first mover, to get out in front. We're being innovative, to be creative, to then go to single to clients that hey, we're going to do this to make your lives better, which will then in turn help us. If our competitors catch up, the only reason why they'll have caught up is because we allowed them to by resting on the laurels that, look at what we've built, great, let's not touch anything anymore. We've always got to just keep on going that one step ahead.
Well, I think that opens a conversation of who's a competitor, right? Because you're talking about the accounting industry at large, right, or as a whole, right? It's like, well, our competitors for our existing business, right, are not KPMG or PwC or Big Four or big businesses like that.
It'd be nice,
right?
but we're not there yet.
Yeah, but that might be an objective of ours, right? But right now they're not considered, right, a competitor of ours. Like we might take a client from them here or there, or lose one to them here or there, right? But they're not a competitor. But from the technology and AI standpoint, they are a competitor. Because if we're talking about how we advancing our objective, right, and how we pushing and being first movers, the first movers are more often than not the big guys because they got the money, right? So they do the research, they mobilize the teams, they spend all this, and so for us, it's staying in front or getting in front is one thing because I think we have the ability to get ahead of them in the short term easily because we can maneuver so much, we can be much more nuanced, we can be agile and we can just like bounce around and do that. They don't have the same ability as that. But when they figure something out, if we both figure something out at the same time, right, and that's a game-changing or innovation or something that's really going to benefit the industry or the business in some way, they can move so fast, right? Because then they can go, okay, we've got this, let's just mobilize with a huge amount of cash flow.
Counterpoint, there is levels of bureaucracy which could slow the process. That wouldn't be in a smaller business.
Yeah.
That's, like you say, about nimbleness. That's the beauty of being small or agile or having a structure which allows for that. Now, I'm not going to pretend to know what they're doing inside at any given point in time, but I would argue there will always be a layer of bureaucracy in those businesses that will slow the initial, but the run rate once they make the decision and press go and do all those things will catch quite quickly.
And so then stepping a little bit away from kind of the tech and innovation and the big business game, I think personally, this is my opinion, and it may be not the same as you guys, but I think that for the everyday business, and as I mentioned before, the businesses that are just operating for the sake of operating and being there, no real ambitions, no aim to grab market share, no real plan to be innovative or anything. They just want to do their thing and continue on. Do you think that's harder now than it has been, in the last 5 years or 10 years?
It's harder now if they're not, probably is with the tech involved and what people know. Because a lot of people have grown pretty heavily, probably since COVID. They've seen the rough times and the growth not there. And since then they've learned a lot and pushed on from that point. I think coming new into the market now is probably far more difficult than it was 10, 15, 20 years ago. I do agree with that.
Businesses that are just resting on their laurels, trying to just do the status quo. I suspect that's going to be wildly difficult going.
Well, I agree. I mean, we've got a number of clients that sit in the basket of we're just trading, right? And we're aiming to improve our trade and do things to keep us trading, but they're not really going for anything big. But I always look at it and go, well, there's so much amount of energy, effort, and time, and to do that, it's not a big leap to go another step, right? And try and push a step on.
Once again, I suppose I go back to my initial premise. Depends on where everyone is in their life cycle. I mean, if your business is much like yourself and more twilight years, let's call it that way, probably incorrect.
20 years old, mate.
Yeah,
Bloody hell.
You see, you're 21 now. Is this relevant? I was moving away from that. That's so twilight.
Yeah, I know.
So tween, sorry, not twilight.
Yeah,
Twilight.
I don't know all these new terms.
Yeah. Oh, don't worry. We're probably already getting the look to say from that nobody says that anymore.
Yeah.
Oh, okay.
There you go.
Is it done?
Yeah.
Is it done now?
Yeah, it's probably done. It's
Okay.
it's all Riz and all those other bits and pieces.
It's all Riz.
It's all Riz.
It's
Yeah.
like these idiots.
Yeah.
No, she's cringing.
Yeah.
Yeah.
I was going to give it another plug, but I thought, no, I better space it out. No, so going back and saying what I was saying, twilight, in your latter years, you're looking towards retirement, you're looking to pass the business on, you're just treading water to keep things going, make the numbers look good so it can be sold at a good price. Yeah, that's an area that I see ripe for disruption, and I think the people that are doing it at the moment could skirt by and get away with it, but I don't see how that can play out. I actually look at a really dystopian scenario, funnily enough. Obviously everything's heavily involved. AI, everyone's talking AI, thinking AI, whether they're just thinking about it in their sleep or whether they're actually implementing it. But I do see this dystopian outcome where it's like, we're going to become more efficient, and there potentially could be a case where there are less businesses overall servicing more people. And the ability to start a new business, to break in and get in, is going to become harder and harder. It's almost like looking at the housing market and then transposing that onto businesses as well. I mean, I do know the metrics, I do know the numbers when it comes to the housing issues, the social issues surrounding that, how young kids are rightly so finding it more and more difficult.
Barrier to entry is
Yeah, and it is harder.
Yeah.
It is harder, irrespective of what some of the older generations may claim. I do
the
sit
numbers
there.
just suggest it's harder. Like it's pure,
Well, they all.
it's pure
I mean,
maths, right? When you take,
it is.
Yeah.
See, the trotted
more to
argument
it,
is
yeah.
like, well, yes, you did, and that was hard, but you were able to do that on 2 to 3 times your wage.
Correct.
When you're buying the property.
Yeah.
You can't do 6% well at 10 to even up to 14 times your wage.
Yeah.
Because it's impossible to make that stack, let alone 18%, and also to get enough money to get your deposits takes a significant portion of your wage. And then by the time you actually get it there, the market has moved again against you, so you're constantly swimming backwards against the tide. So that scenario that's happening with our housing markets, I could potentially see that happening with our business markets as well. So that's something to potentially consider.
And hence why I said that it is harder for someone, let's say in the SME market, to enter that. There's so much competition, people established and so on, and exactly what you said with AI and so on. It becomes that much more difficult than it was 20 years ago.
Yeah. What I find interesting though is over the last, and we've certainly experienced it and discussed it many times, but over the last 5 years, nearly 5 years now since COVID started, right? We had the mass resignation, right? We've had the labour shortage.
Yep.
And we've had the fallout, whether that's through the hospitality industry and tourism because of COVID itself, or because of, for us, because we had a lot of drop in migration to Australia, then where there was less talent here, and for whatever, there's a bunch of reasons why there was a smaller talent pool, right, which made the employees in the driver's seat, right, in terms of, right, either, what job they wanted, or negotiating the salary, or, the position of power that they held. Right, and so it seems like the logical move would be to take advantage of that. But there was more businesses started than people just going, well, I'm just going to go and get a cushy salary and demand something. So you would have thought that because business was so hard, that businesses would have stopped, right, and people would demand more salaries and it would have gone up. But it went the other way, right? Why? Is it because the idea of owning a business and how it's showcased through social media and all these people making billions of dollars, some fake, some not, right? That the idea of being a business owner or an entrepreneur became overinflated and and bullshit? Or why Why would the numbers suggest that you should not start a business, but more people start one?
Go on, man. Knock it out of the park for me.
Yeah, it's not going to happen.
Work on you.
Sorry, Carvy's just having a nap. So do you want us to talk about something different, Carvy? No, just lie down, make yourself comfortable. That's fine.
She's still trying to get over Riz.
Yeah.
Would it have been made at that time that because people had the more flexibility and so on, that it was easier to start a business to a certain degree or operate a business because also there was more funding somewhat available at that point in time versus now?
So you think they potentially were like starting a side hustle while working because of the flexible work arrangements, which inflates the numbers?
Off we go.
Yeah. Yeah, well, yeah, certainly. I mean, side hustle was just a massive thing over time. It was like, well, don't get trapped in the rat race, start up a side hustle and, try and generate yourself some money either through Amazon or through social media or through something.
I think you need to give credit where credit's due with all the different generations here, but the younger generation coming through tends to be wildly creative, naturally.
Absolutely, yeah.
That's something which, does shine through in a lot of their culture and their ability to use tech in order to create new things. I think from that perspective, the idea of actually starting a business was probably not the mindset that they came at it from.
Right, okay, yeah.
I think it was more of, like you said, this is an interest of mine, a hobby that then, hey, I'm getting interest from other people about this and build and build and build. But once again, as we know, the commercial reality of running a business, to take it from hobby status to a business is a challenging time.
Well, and here's where I think that there's a real conflict in this whole discussion, because we're now in a world of instant gratification and speed and instant knowledge, and AI has been a big player in being able to find out any information you need to in a relatively short amount of time. But what hasn't changed is and in fact it's probably gotten worse. I don't know the numbers on this, but it's probably gotten worse. But the time it takes to start, build and grow a solid and sustainable business, generally speaking, like of course there's the random, white whales that, just go nuts, in tech spaces and things like that, the unicorns, right? But the reality is that it's actually harder now because of the amount of, the ease there is to start a business now. It's like everyone can start a business now. It's not like 50 years ago where you had to get a lease and build like now you do it online. Cost you no money at all. You just start a business, right? Sit on your sole trader ABN, right? Set up a website, try and sell some shit, drop ship, like the cost of entry,
the barriers to entry,
to start a business are really low.
So
you can do it,
which is a good thing.
But that makes competition higher, right? So some people are going to get some of the formula right early, some are going to take longer, something's going to work, they're going to not. But everyone goes through the same cycle. And you're talking about business cycles, like inevitably they're all going to go through the same cycle and go through the same pain that everyone goes through. But the patience required to have a proper business that's going to stand the test of time and be something that's going to be, a legacy, if you will, for anyone that's starting a business. The timeline is still the same or longer, I think, right? Is that not
I think it just varies. It varies from business to business and how instantaneous and successful. I mean, I think a lot of people just want to grow organically into having a business. They don't have the idea of where do we want to be in a year's time, 2 years' time, 5 years' time. I mean, obviously there's ambitious people that think this way. I do look at owning a business as you have a finite time with this thing. You need to make the most of your time. And yes, it means taking risks, and some of those risks won't pay off. So there's always going to be setbacks and readjustments. I mean, even anecdotally for myself, I know of a business that they've probably been in that initiation stage for over 10 years. And they're obviously making strides, but their success really isn't coming until more recently. And I suppose when I look at a business like that one, I go, capital investment was probably the key ingredient that was missing.
Well, that was going to be my question.
To push speed.
Yeah.
No, why is it? Because they've just taken their time and built organically and sustainably.
But could it have been faster?
Once again, this is my argument to say the capital investment in order to get it was not because of we need this particular part. It was to fast track the growth.
Sometimes early capital investment could have been hindrance because they're not ready for it.
There's always that argument too. So that's why you don't just throw money around left, right and centre, because it can be wasted. You don't want to dilute the ownership so far as well that you disincentivise the people that are working on the ground as well. It's a balancing act.
Yeah, and look, I mean, that's sort of the next point that makes from that is, well, now you're talking about the cash and the people, right? And so the cash investment is one thing, but it can be wasted or it can be utilised to speed up very well. But so, I mean, obviously you, more so than Manny and I, from the investment standpoint, how much does the people factor affect the decision as opposed to just the pure numbers?
The people factor in what?
If you're going to invest in it, if you're going to put money in it.
If I'm looking to invest, the people behind it, the people are massive because they're the ones that are sparking this narrative, this idea, this dream. They've got the vision, and it's one looking at them to sell the story because. Especially when things are pre-rev, or probably more realistically for most people when they're investing pre-profit, you're taking a fair leap of faith.
Well, I mean, you're investing in a small private business.
The next probably step after having the idea and being sold that idea is then looking at the capabilities of the team involved. So someone can be a phenomenal marketer, but if they don't know anything of how to actually achieve it, then it's you're going to blow your money. You may as well give it to the snake oil salesman. Someone can be woeful in marketing but be operationally brilliant, in which case they won't attract anybody to get their business moving. And sometimes it's the diamond in the rough that as an investor you're trying to search for, but realistically at the end of the day that's still going to throw some problems down the track for you.
All right, so let's get a little bit, real, as we said in the beginning of the video,
and bring it all home.
Yeah, in the last year, right, we've done some acquisitions. We've invested in tech. We've restructured the team. We've changed the way we operate, the model, the systems, the software, basically the business. Right, despite being running for many, many years, right. 95% of it is brand new.
Possibly started at 9.
And what did we do right?
Okay. I mean, I don't want to give up too much of a pass and say we'd never fucked up. I mean, that's.
No, but we all do. That's how we learn. Right?
Yeah, no, exactly right.
But Manny, you want to tell us that we haven't.
No.
Happily tell.
Manny's more operational than I am.
Just take about.
It's all Manny's fault.
I was waiting for this. Pass about.
Just being humble.
Humble partner.
Mate, I've forgotten, mate, seriously, it's going to annoy me right now, but who's the rapper?
Which one?
The one that sees humble. Sit down, be humble.
Kendrick Lamar.
Thank you. Humbleness around it.
Yeah, because there's no one more humble than a rapper.
That's why I think I was channeling him specifically.
Yeah. What do you think, Manny? What do we fuck up? What do we do right?
I guess integrations and softwares, I guess, is always I wouldn't say it's always a fuck up, or it was a fuck up. What I would say is it's always an evolution, because sometimes you outgrow it. It doesn't quite fit with the parameters it would have fit at that point in time. But if you grow and all of that sort of things happens, then you've got to change. So when you implement, it could have not been implemented well or right. That would have been one, in my opinion.
I think you're hinting at the ability for not just software but the business to be able to scale at a very short notice. If your business is not set up for it, then the upheaval that comes after the fact can be detrimental. And like you said, we've done a couple of acquisitions this year, and I think you're right. I think it was the naivety in the team of understanding what was truly involved. Where we could have done it better. And now in hindsight, now we've got knowledge, expertise on it. Wouldn't say we're full bottles, but we're certainly better.
Yeah,
absolutely.
So that hurt the bottom line this year. Would me as an outsider looking at you guys saying, would we have not done it? I don't think so. I still think in the long run we'll benefit. But I think, we definitely could have done it better.
Because I think that
we'll tackle it differently.
Yeah, we'll tackle it differently. But I think the benefit to any business to try and be able to have freedom to make decisions, whether it's about innovation or tech or acquisitions or things like that, requires scale, right? When you look at what the effect of 1% is across a business that's doing 500 grand in revenue versus 20 million in revenue, right? Like, you've got cash flow available to make these decisions, and so would we have done it anyway? Of course we would, right? Absolutely, because that's just going to give us the ability to make decisions that we wouldn't have been able to make at a smaller size.
Exactly.
But I think fundamentally from my side, like, my view is that there was a lot of lessons learned. There was a lot of things that we could have done better, right? There was a lot of things we did really well, right? And fundamentally, the decision to go down this path of just massive growth and tech advancement and all at the same time, right? Which is a lot for any business to take on when we're not experienced in AI and automation, right? We weren't experienced in doing acquisitions. we weren't experienced in, running a team of, 30 people, right? And so we've gone in with the naivety of going, we're pretty fucking tops, we'll be right, we'll figure it out, right? And we have, right? But I think what I'm getting to is that the things that we've done wrong, I think the most important thing that I've learned, right, is that we need to address everything with speed, right? And I think, and you and I have spoken about this a lot over the past, it's like, there's so many times over the last decade of us working together, and even the last year or so where we've been working together, where you go, we could have made that decision a month earlier, right? And so if you then sum up all of those things, it's like when you're looking at a budget where it's like, we only blew that one by 1%, blew that one by 1%, blew that one by 1%, and all of a sudden you've got a big number, right? If you then apply that same logic to all of these things that we could have done better, if we had just pulled the trigger on either doing something or not doing something
at that point,
a month earlier or 2 months earlier or something, then you can actually make a pretty distinct difference to,
I think going on to that fact, I think this is one area where a lot of smaller businesses can be hesitant, and that is your HR. And pulling the trigger necessarily on someone who doesn't fit within the culture of a business, just because you're trying to be nice, it doesn't do any favours for them, and it doesn't do any favours for you or the business. That is an area where I do see people being way more hesitant. They might be as ambitious to, I want to grow no matter what, but I need this person. They're not where I need them right at the moment, but I need to keep them. And that's where I sit there and think, maybe that doesn't always work.
Yeah. Look, I think this is an important point. Like my advice to anybody out there we've had a lot of people join and leave the business, on whatever terms is irrelevant, right? But we've had a lot of people go through that. But one thing I can say, and it's advice that Dad gave me a lot, and probably to you as well, right? And probably to you as well. You've known Dad for a long time as well. But the advice that I always got was, if somebody is underperforming, right, or somebody is not a fit for one reason or another, right, it sucks for both sides.
Yeah.
Right? And so this is really important, because as long as you've done the right thing by going, okay, well, we can try and put this person in the right position, we can try and teach them or mentor them or, take them down the right path that's going to work. But fundamentally, if it's the wrong place for them and they're not happy and therefore underperforming, so we're not happy, removing someone or someone resigning is a good outcome for both.
Yeah.
Right? Everyone looks at, termination, or looks at people resigning, or looks at, the staff turnover as a horrible thing, right? Staff turnover can be a horrible thing, right? But if you do what we did in the last year, where we've grown very quickly, right? We've done a lot of things. We've brought in people that have come from vastly different environments, right? In the different firms that they're working at. There will be fallout from that, right? If you're one business that is stationary and doing the same thing all the time, and you have massive staff turnover, you got some shit managers.
Yeah. There's a different.
That's a different thing. But when your business is evolving, when you're innovating, when you're changing, when you're moving, right? People aren't going to always want to come along for the ride, right? And they're going to be resistant, and they're not going to enjoy it. Exactly. And the best thing for that is for both of you to part ways. Right? And find someone else that fits with where you want to go. Yeah. Like, that is just a non-negotiable. But people are too scared to do that, because they think that, I'm going to negatively affect somebody.
This will hurt my cash flow. This will hurt this. Yeah. This will hurt that.
But are they also scared that it's going to impact their own workflow? So if I remove or have to replace them, I have to do their portion, or someone else has to do. I
agree. There is that's another facet to it as well. Yeah, you're right.
I think this is also as you add depth to a business, right? And where you then have in a small business where the directors are generally involved in everything, and then you get bigger, and the team gets bigger, and then you have a layer of management, and then a layer of executive, and then perhaps there's multiple layers of management and things like that. There's always a mechanism of self-protection, right, in that. So, when there's things that are going wrong and you've got a bad staff member, but you need the work done, right, then you still, like some managers are still like, well, I need to make sure my numbers are right, so I can't lose people, right, otherwise my numbers are going to drop, or something is bad. And so the financials then overrun the fact that they shouldn't be there in the first place.
Yeah, then a poor decision is made to just deal with it, and we'll keep on muddling through, rather than going, let's take the short-term pain in order to get a better outcome down the track. I mean, all this conversation here, I suppose, getting back to our year of disruption and how disruptive it has been from the numbers perspective. As the investor hat person looking at it, I'm looking at it going, if this was a business that was, as you say, stagnant, the incumbent, the big player, the blue chip, whatever you want to call it, and I'm just purely looking for a simple return, this would be troubling. But it's more of a case that I'm looking at this going, no, we've spent time and money, which has been shown up on financial reports. It has hurt us in a way, but I actually look at it now going, we have now cleaned the slate of the business to have a solid foundation to go to that next level. This next period can be a lot less disruptive because we've taken the time and the pain in the short term in order to get it to where it needs to be. There's not a stone which is hiding an issue which we're just ignoring. It's everything's been cleared, everything's been turned over. We know what happened. We're being self-reflective enough to say, yeah, that hurt. Okay, we're looking to do better, but at least we've got the foundations to go to that next level. So that's how I'm approaching it.
Do you think that, because there's a conversation here to be had about, I see a lot of business owners, and I've seen this through our client base, some here, some no longer here, some, whatever, sold, etc. Early greed, right?
Yeah.
Right, early greed, right? Start a business, and now with social media and all of this, right, it is only doubled or tripled down on this need for a lot of people to say, I've started a business and now within 12 months I drive a fucking Mercedes, right? But when you're talking about what you're saying, right, the reason you're looking at it from a different point of view is because you're looking at a business, and this one in particular, the same way Manny and I do, is go, well, this is something that is it's a long-term decision, it's an asset that we're building, right, and it comes with long-term benefits. So I would rather wait than strip out anything early and sacrifice, well, what it could be.
Once again, we're now delving into the psychology elements of it.
Let's do it.
Yeah, I'm not sure. Sorry, I need me to put my head in Manny.
Why are you stressed, Manny?
Is it because he's not humble enough?
Yeah, I think
I'm
so.
so humble.
Well,
I'm so humble. When am I? Carvey, am I humble?
Just like the button on your vest.
she shakes her head.
Turn the camera around.
Yeah.
No, thank God. Stop it.
Kendrick.
Yeah.
Where was I going?
Psychology.
Psychology 101 of
Psychology.
investing in business. Once again, like, not everyone's built for business. Not everyone's built for investing. Not everyone's built for
Does-
multiple different things in life. We can't all be, amazing at everything, Wow. I can just see the number count on our viewership just going down.
What an asshole.
Blood no.
Yeah, sorry.
I lose brain cells just as much as viewership.
What is it, sorry?
Blood no.
Like and subscribe. It should be you. I'm not taking that off you. That's your job.
I feel like you're trying. I feel like you're going, you know what, I could do this bigger and better.
No, I can't overshadow you anymore.
Do you even have a shadow?
No, I'm a vampire. No reflection.
Yeah, look, I think it gets down to the psychology of who you're talking about. Some people should be in business, be owners. Other people maybe can learn it. Those definitely not. And I suppose it all comes... I always think of that delayed gratification test, that the social science geniuses concocted, where it was like you put a jelly bean in front of the kid and say, well, if you leave it there, see the ones that do leave it, and the others that are like, soon as it's hard to teach to be patient. It's very but going on to your little social media element rant, I do think there is a lot of pressure targeting people to think very counter that narrative. So yes, those of us that are somewhat susceptible to being convinced, nah, don't wait. Go buy that thing that you've always wanted. You only live once. YOLO, I should say.
YOLO.
YOLO. Yeah. So is that still relevant? Probably not.
No more YOLO. Oh, sorry.
Sorry, scrap that. Sorry, Gen Z, I got it wrong.
He was getting it right when he was in his 50s, though.
And I have my cane, I feel like walking out. So yes, I take your point on it, but yeah, genuinely greedy people that just want me, you should avoid like the plague, irrespective of whether they're in their own business looking for investors or they are the investor wanting to invest. They are so wildly detrimental. Somebody that can sit there and understand that if you're investing in a business, there's a time, there's a place, there's a journey you've got to go through. You can't just go, day one, $1 million, thank you very much, move on. You just got to kill it.
And I think you'll probably resonate with this. The people right now, or some business right now, they would have had great growth and so on in the COVID times because certain demographics done well in that sector. Now everything's normalized to a certain degree. Now they've realized the normality and they're going back down to normal, and some of them are closing shop or they're shutting down or so on because they've not been able to either innovate or change with the times as such because they're used to what happened back in COVID.
Right.
I'll give you a prime example of that. Zoom. Zoom Corporation.
We've spoken about this.
Probably one of my biggest faux pas in terms of investing. I thought I invested when it was on its way down and hitting a plateau where I thought this is a very strong cash flow heavy business that has the ability to invest, to innovate, to change, to become something beyond the COVID play.
Yeah.
Got in too early still, and obviously have regretted that ever since. And yeah, the business, unfortunately, even with its cash flow generating abilities, are trying all new things, and so it happened to the big players.
Yeah.
And I agree with you wholeheartedly.
And so that's one of the things that I think is one of the most important attributes for a business owner or director or entrepreneur, whatever you want to call yourself, being patience. That I've also said speed, right? And so now we're talking about, well...
You're talking about the timing, not the drug to make you faster.
Yeah. No, well, we only do that,
When I'm not condoning, I'm just getting it right.
Yeah. No, if you want productivity...
Been blading on this.
I can subscribe.
No, that is it now. That might be his job now.
No. I can't be humble.
No, but I think that when I talk about patience, the point that I want to make is that when I talk about patience, and you'll both probably, well, I hopefully agree, is that patience is about having an ultimate objective that is quite grand or quite, entrepreneurial, or everyone wants to make a big business, or not everyone, but people that want to make a big business or want to grow something, or they have ambition and want to drive and do stuff. Patience is about the long game. When I talk about speed, I'm talking about all the little shit that happens throughout business on your daily, weekly, monthly, quarterly, activities, right? There's a good argument to say that if you try to analyze every one of the decisions you've got to make properly, right, you're going to screw up your business.
Yeah.
Right? You've got to go with gut a bit of time and just move quick, right? On small things where it's like, okay, maybe this process, maybe this software, maybe this person, maybe this.
I do agree with that.
This. And
You're
so,
right.
is it better to be too late on everything or too fast on everything?
I think that's a skill. That's the skill in understanding how and when.
I think what I've seen probably since COVID a lot, what hinders that is ego. So people got growth very quickly.
And our next podcast, ego in your business.
Yes.
Do you have someone killing your business?
How to be humble. How to be humble when you're in first class.
Shift in economy, I don't know. Yeah.
Cool. Good.
That was good talk.
Yeah.
Good talk. Good
Probably a good spot to leave it.
Yeah.
Oh, no, I don't want to take over your job. I mean,
you've moved to the co-host.
I've stepped up. What was that, darling? He's prettier than that.
No. It's under Carver's instruction. Let's put it at that.
Yeah.
Leave it at that.
Yeah.
So why do we have a really strong alt-right following? Glennoch. For the alt-right in you.
Lead in your pencil.
Thank you, everyone.
Thanks, everyone. We'll see you next time, where apparently we're going to be talking about ego in business, how it's going to ruin your life.